Elliott wave analysis is used by a number of traders, not very many, but those that do use it do stick by it because it does give them opportunities within the market. Talking now to somebody who can tell us a little bit more about what happens is Lee Sanford, IG client, and also you at tradingcollege.co.uk teach this analysis, but I also believe you use it as well in your own trading. Is that right?
Absolutely, yes. So it gives a trend, a structure, price structure. It tells us where we are in a trend. So yeah, we very much plot our way around a chart by using the Elliott wave. Ralph Nelson Elliott in 1938 coined the wave principle. And we know it as today as the Elliott wave. So it's a useful tool that we use every day in our trading as day traders and swing traders. So let's just take a little look at some of the things that the Elliott wave helps us with. It helps us identify the trend, identify counter trend moves within a trend. It confirms the resumption of a trend. This is a great one because it also confirms the termination of a trend. When's the trend coming to an end? And it helps with that as well. And it helps us with our trading setups that we use every single day. The rules are always the same. It's like a game of chess, but the outcome's always different. So we're plotting ourselves around a chart, and it's exactly like a game of chess. So let's just take a little look at the actual basic wave pattern here. And we're looking at the motive phase here on the left-hand side of the chart. This is the accumulation phase. As the market has an impulsive move higher, then we have this corrective move. Now you've got to think that the trend has already been in a downtrend. And what happens here is that traders are thinking the market's going to continue down, but this wave area here, which is wave 2, stops a little bit higher than the previous low. And now we've got potentially a 1-2 wave here. After this, after the wave 2, then we see a higher low. We don't break below the wave 1 low, and now we see this wave 3 progressing. And this is what we all want to be on. This is the trade, if I'm talking to traders out there, this is the trade that's strong, long, wide-ranging candlesticks where you want to be on, because it's mainly the most profitable trade. And as we progress, we are in a nice trend here. We get to the end of wave 3, and then we come into what we call wave 4 here. And now we're sort of getting into the maturing phase. The trend is established, and now public are starting to enter the trend here, and we start to go into the final stages of the basic pattern. We're into wave 5, which is the saturation phase. Have you ever been in a trade when it completely reverses and starts a new trend to the downside? Well, the saturation phase. Everyone's talking about it, everyone's long. It's a very popular trend that we're in, and it's the end of the move normally. Then we go into a corrective phase here, which is a wave A, B, and then C. And that's the basic wave pattern. And once we've completed that, then that's the structure of that advance. And
one of the questions we get asked a lot, and within this wave structure, is when do you know it is the wave principle? When do you know that we are in this 5 up, 3 down pattern that is developing? Because some people, the critics of this system, say, well, you only know it's Elliott wave when it's finished. Is that a fair criticism?
I think the thing about you've got to take, the word I use is chill out and relax about the whole thing, because we're going to combine some Fibonacci ratios soon. And for me, and for our traders, we know what junctions we're looking at, where those reversals are. So at a wave 2, we know, we're going to bring some slides up in a second, that if it is a wave 2, it's going to reverse at that area. So no, at the end of, it looks pretty because it's a pretty chart at the end of it, because it's a 5-wave advance and 3-wave.
It's nice and balanced.
It's nice and balanced. It's never perfect, Jeremy. I mean, you look at a chart, very rarely do you see a perfect 5 waves up. But you do know where these turning points are, and if you get these turning points, the risk reward is absolutely fantastic.
But it does follow rules though, doesn't it? And you've just drawn some extra lines on here, and this is where you bring in this Fibonacci thing. This is really important, isn't it?
Yes, so we're going to talk a little bit about Fibonacci, but you know, we have waves within waves. waves, and you know, when we see the uptrend, then we're looking. This becomes then wave one. You can see we've had 5 waves up and
Yep.
ABC.
Yep.
Well, now that whole structure now creates one wave up.
Okay, so this is just a smaller structure within a bigger picture.
And we've got a slide here that shows you, on the next slide, in fact, shows you the whole pattern as a whole. But here on this chart, I mean, if you looked at this chart, I think you could quite easily count 5 waves up. Take the major peaks and the major lows. Don't worry about those little candlesticks in between highs and lows. But if you just looked at this, you could count this as a 1, 2, 3, 4, 5, and that's quite easy. And so now, if you were looking at it at 5, wave 5, you'd look back to the left of your chart and say, okay, we've come from, you know, a nice advance to the upside, nice motive wave to the long side. So you might be at the top of the market, and it really does help with that. Okay, so on the last slide, we just saw that basic 5-wave advance, and within the circle, that is just that part of the trend. We've got a whole 5 waves to go up in this huge, great big trend that could be happening and unfolding.
So the 5 waves you just told us about, staying on this chart here for the minute, the 5 waves you're telling us about are the point of the beginning of the chart up to that 1 bracket. That is your 5-wave up, and you've got your ABC correction within that red circle.
Yes.
So that is just one part of a bigger Elliott wave
Structure,
pattern.
absolutely, yes. And so at each point, we can use this Fibonacci ratio to plot where those reversals are coming. And if it doesn't, then we just look for an alternative count, and we look for the next level. But you're watching those levels, and I think that's why it gets a bad name, because when people start to recount, or recounting that does alternate counts happen, people just got to relax about it and just go with the flow and just look at those different junctions using the Fibonacci ratios. So there's some rules here. Wave 2 never retraces more than 100% of wave 1. And then wave 3 cannot be the shortest of the 3 impulse waves, namely 1, 3 and 5. That's important because you're looking as a trader to be in wave 3 because it's never the shortest wave. It's not always the longest wave. And wave 4 does not overlap with the price territory of wave 1. So there's some guidelines that you have to stick to. That's the rules of the game of chess, and that you have to stick to those rules. And if you don't, then you have to recount and look for a different wave. So a little bit of a tip here for anybody is just look at the bigger picture. When you start counting, I'm sure there's going to be frustration because you're not going to quite get it perfect. Look at the bigger picture, sit back on your seat and start looking at the whole trend and say, well, okay, did this wave go into this wave, and was wave 3 the longest wave, and was wave 1 the same as wave 5? And just practice, just like anything. It's like learning a new skill. You just got to practice this, and it's never perfect. But look at the bigger picture, Jeremy.
So you mentioned the importance of Fibonacci around this. Explain about Fibonacci before we get into how it applies to Elliott Wave. What is it about Fibonacci? Where does Fibonacci come from? And what is it we should know about Fibonacci in dealing with Elliott Wave?
Well, it's the mathematician Fibonacci that created the number sequence. And from the number sequence, we can have these ratios. And the ratios that you'll see in your charts, they'll be called Fibonacci retracements. And you can see here on this slide that we got the number sequence. It's just adding the previous 2 numbers together to get the next number. And from those numbers, we can find the ratios, 38.2%. And we can use those ratios to plot those reversal areas on a chart. And so it's a very powerful thing to use. So look at these ratios that we can use in our trading. 23.6 ratio is, and you can see on the slide here, by dividing one number in the series by the number that is 3 places to the right. I'm not going to go through every single one, but right. 38.2, 61.8, golden ratio, golden mean. There's a lot about it online about why it's the golden mean. You got the 76.4%. Really, that's the one I use, the big 76. This is so important for us because this is going to tell us where we could be entering into a wave 3. Never the shortest wave, the most powerful wave, the most profitable wave that we all want to be in. Also 50%, it's not a ratio, nor is 76.4%, but some traders use that. I don't particularly use 50%. I'm using the 38.2 and the 76.4% to tell me the junction or the reversal area of where the price could be going next. So in your chart package, you've got the Fibonacci retracement tool, also the Fibonacci extension tool. That's just measuring symmetry. But we're really going to concentrate on the retracement tool because that's going to measure those areas, those junctions where the price could reverse. On this chart here, you can see that I've circled one of the Fibonacci ratios and it's at 61.8%. The market from the start of September has done an advance. It's gone up in price. It started moving higher. Then we've had this retracement, reversion to the mean, whatever you want to call it. So we've measured the 61.8% and price reverses exactly off of that fib area and moved higher. So if we reverse off that fib area, 61.8, or we could drop below into 76.4%, I'm looking for buy signals. I want to be long because we know the next one precedes wave 2 is going to be wave 3. So I want to be on board this trend as we start to move higher. The great thing about it is that as we start to turn higher, I could have a stop underneath the turning point of wave 2 pivot, or a wider stop which should be at wave 1, the start of wave 1. My reward is going to be big because wave 3 is often a big move. So I'm plotting this. If we break below wave 1, game over. This trend we're not advancing higher. And so I just plot these fib areas, and as we turn higher, then we're in wave 3. And you can see here I've just helped everybody by just putting the arrows in just to where I've placed the retracement tool, and it brings up the 61.8%. Okay. Now wave 2 pullback is often quite deeper because people are still short from the trend that's just happened. I can't believe that the market's going to turn around and go back higher. So all sorts of things are taking place in that wave 2 pullback. New shorts, people that are still short from the previous swing low, and maybe people start accumulating new long positions maybe. This catches a lot of people out. You desperately want to get onto wave 3, but a lot of people don't get on wave 3. They might get on the middle of wave 3 because they know the market's pushing higher, but it's that turning point. Just plot that fib and just look to see if it reverses off of that area. Now once it does reverse, we can now find where the profit target could be. So we could take those 2 circles again. I've drawn those circles in, and I project a Fibonacci extension. So not the retracement, now the extension. And I like to use the 1272, but there we are again. We've got this 61.8, we've got the 161.8% at the highs. So now that is my goal. I'm going for that target from way down below at that 122 area. And you can see the risk reward is fantastic. So I'm looking for that to be a junction where I could be taking my profits, my goal. When it gets to 1272 fib, I certainly want to be taking some profits there and very much trailing my stop because we could also reverse. But remember the rules. Wave 3 cannot be the smallest wave. It's not always the biggest wave, but the probabilities are that we're going into a wave 3 and it's going to be a big wave. So 1618 is the target here, but the wave is not over yet. So now we get into the very maturing phase here. We're in wave 4. Wave 4, if wave 2 is a deep pullback, then wave 4 can be a zigzag, triangle, or a flat type pattern. I mean, we've got this sort of zigzag triangle pattern here on this wave 4. This is one of the most high probability trades because we know that we've got an established trend here, and we're looking for another leg higher. Now what we can do here, we can use the fib ratios again and plot the 38.2% on this. As you can see, we do the count, and here's the wave 4 pullback. We know the trend's not over, so we're confident enough to want to get long this market, and we start to see the market push higher. So from this area here, now where's the profit target? So if we're entering at 38.2%, we're looking for a turn up at that wave 4, where can we project the profit target? So I like to do the same again, from 3 to 4 low, plot the 1618 fib extension, and this is where we are on this chart as I took this photograph of this chart. We're right at the extension. So look back, we've done a wave 5 advance, nice motive wave to the upside, motive phase, and now we've completed virtually nearly the 5 wave advance here. The next step is an ABC.
Just one quick question while we're on this, and that first wave there, the length of that, you've replicated that length up from 4 to 5. Does it often not get as far as that, the 5 wave?
Yeah, absolutely. So sometimes wave 5 will be equal to wave 1. It doesn't have to be. I don't see it happening as much. I see prices reversing more off the 1618 fib extension.
Yeah.
But you're right. It can be the same length.
Yeah. So then you've got this divergence building up, and that's presumably when you get the turning point.
Yeah. Well, you know, if you looked at a professional Elliottician and you spoke to them about wave trading, the wave principle, they would say, well, you don't need indicators, but if something's going to help you plot where you are on a chart, then use it. So wave 5, often, I'm doing this every day, I'm trading virtually all the time, wave 5 often reverses with a divergence. You can use the MACD indicator or any indicator that's got momentum, RSI or whatever, and when that divergence kicks in and you've got a clean wave count, you could be at the top of the move and the reversal's coming soon. So some tips for everybody here as a trader. You know, always start with the bigger picture. Use indicators to help. Maybe use moving averages, because a wave 2 price will be below moving averages. Use your basic moving averages, and then wave 3 price will go above the major moving averages because we're in a strong trending market then. So use the moving averages to support price. Now, if you've missed wave 3, you can maybe get in on wave 3 on a smaller time frame pullback, but you're above the moving averages. The moving averages are providing support as they do, and it's a perfect scenario. You're confident that you know that price could still continue higher.
Which moving averages do you use?
8, 20, 50 and 200. Exponential moving averages. Just keep it simple.
Oh, exponential.
Yeah, or you can use simple. It really doesn't matter for me. I use exponential. Yeah. They're a bit quicker and always have done for like 20 odd years. But yeah, I mean, you're plotting 76.4 below the moving averages. We go above the moving averages. We're in wave 3 potential. MACD turns up. Let the MACD help you, and then you're projecting that 1618 fib target. That's your objective, to hit that target. Then you get the pullback, wave 4, 38.2%. As long as we stay above there, then we're going to go for a wave 5 extension. Wave 5 extension, wave 5 final wave will then probably come with that divergence and a big blow off top potential, and that's the end of the move. On this chart here, you can see every time the market goes up, draw your fib retracement. Okay, so we go up here, and then we draw the fib retracement from the lows to the highs. It plots 61.8% or 76.4%. It's the highlighted blue line there. We hold 61.8%. We could go higher. I mean, we've got to be honest. Nobody knows where the market's going to go next. We just need to plot different junctions, different reversal areas. 61.8%, I want to be looking for longs. I could be in a wave 3. Now, a lot of the time here, wave 2, the data that's out there, the news, the economy, it's not normally that good. So this price action leads. And that's where I think what you said at the start, Jeremy, about people don't believe in it, because a lot of times when we're at these turning points and we're going into wave 3, probably the news and the data is not that great still anyway. It only starts to improve when we start to probably get to the end of or mid of wave through wave 3. So that doesn't line up. For a chartist, for a trader, I'm just plotting these reversal areas and want to make a return from it, and the risk reward is absolutely fantastic. Here is the Dow. So the market dropped. Do the same for the short side. Draw your fib retracement. The Dow stops here for a few days. That's a few hundred points profit potential. The MACD green line goes below the red line. The momentum and moving averages have crossed down on the MACD. And so it's an area we've got to be cautious with. And that's a trading opportunity. And if you look at this chart here of the pound US dollar on a 4-hour time frame, it doesn't look perfect, does it? But you can see that we've come from a strong trend. Look at the wide-ranging candlesticks. That could be wave 3. It normally is when it's wide-ranging candlesticks. And so as we go up to make a wave 5, MACD's turned down. We've got divergence on the lines of the MACD. We're probably in a wave 5, and the next phase is going to be the A, B, C. So really you want to be looking for trades on the turn of wave 2, the turn of wave 4, and then also the B wave. The A is the next correction wave, and then the B is the rally, and then the C is and you want to catch that B rolling over as well. So you can see here that this is the next stage. This could happen in this market, and so you're waiting. If it doesn't happen, then you just look for something else.
So just to summarise, you've been talking about these markets that are going up. Does Elliott Wave work down the 1, 2, 3, 4, 5 waves and the ABC correction? Can it be a reversal of what we've been seeing in your examples?
Absolutely, yeah. Anything that's got a price, any chart out there, it can reverse. You just turn it upside down. 5 waves to the downside, and then the 3-wave correction. And the wide-ranging candlesticks increase to the downside. And if you're a trader, you want to be shorting those fearful candlesticks get wider. Most people are long the markets, and so if you can find a wave 3 short, they're so good to trade, and you're going to make a lot of money, big profit, great risk reward, and just plot those profits the other way round.
Okay, Elliott, thanks indeed for taking
Pleasure.
Elliott Wave apart, and I've learned a new word, Elliottition. That's a good word to end on. Thanks so much indeed for your time. That was Lee Sanford there from tradingcollege.co.uk, and you can get more with Lee on his website. And that was a run-through of some of the educational fundamentals to watch out for when trading Elliott Wave.